I'm Christian Gopal here with my colleague Louise Street to talk about the Q1 2024 Gold Demand Trends Report. So Lou, a super interesting quarter for gold and one for the record books. What's the details that you can tell us?
Yes, obviously the price has really got people talking in recent weeks after what was actually quite a sort of stable, quiet start to the quarter. In March, the price just went on a tear and hit a series of successive new highs, which continued then even into the first part of April. And now we know kind of what's contributed to much of that price increase. We saw a big increase in net long future positioning on COMEX and some likely similar activity in China. And then, of course, from the kind of the sector demand that we talk about in the report, continued really strong buying from central banks, as well as OTC demand, helping to really drive that price strength.
So central banks have been a real pillar of support for the gold market in recent years. What specifics did we see in the first quarter?
So we actually saw the strongest quarter for a first quarter of buying, 290 tonnes on a net basis added to global official reserves. Now, having said that, we know that central banks aren't seasonal in their buying, but it's just indicative, of that sort of strength of momentum that's carried on in buying over into 2024, and we see, continued strength from that sector.
Now, have we seen a continuation of the trend where it's being led by emerging market banks?
Yes, exactly. China, India, and Turkey were the three largest reported buyers during the quarter. And it's also worth saying, we've seen no pickup in kind of reported disposals. So the largest reduction in holding reported last quarter was in Thailand, and that was more of a kind of an accounting issue really around the purity of some of its gold. Now at these levels, it will be interesting to see if they continue to buy at the same kind of pace as we have been seeing. We could, I guess, see some more sales from some of the banks that we know are a little bit more tactical in their holdings. I'm thinking of kind of the producing nations like Uzbekistan and Kazakhstan. But as I said, we see another year of really solid demand from central banks.
Now, if we turn to jewellery, the largest source of demand, given the high price environment that we've been, how did that perform throughout Q1?
Yeah, I mean, jewellery demand is much more price sensitive than some of the other sectors. Typically high carat markets in sort of China, India, in fact, most of Asia, the Middle East, they're much more price responsive because of the way that the jewellery is priced. So as soon as that sort of price rise really started rocketing in March, it just choked off a lot of that demand. That said, if we look at Q2 as a whole, jewellery demand was actually really resilient, and it feels like that's been a story for quite a few of the quarters recently. It was down just 2% year on year on a global basis. And when we look at the quarter, we can kind of see there's two real reasons for that. The first was that January and February, when you look at the price environment, was perfect for jewellery buyers. It was kind of really stable, in fact, sort of mildly correcting lower. So really giving jewellery buyers that confidence. And the second was that in those markets as well, there's a real quasi-investment motive to buying gold. So a lot of the factors that were underpinning investment demand for gold, thinking high inflation, weaker currencies, helped to feed through to support high carat jewellery purchases as well.
And Q1 typically a seasonally strong period for China, what with the Lunar New Year, amongst other things. What did we see there?
Yeah, so Chinese demand had a lot of support from that sort of in the run up to the new year and around mid-February. But when we look at volumes on a year-on-year basis for the quarter, they were lower, largely because of the price rise, but also because it was being compared with a really strong Q1 of last year. When we look at value in China, that's a bit of a different story. It was absolutely staggering. I think it was around 90 billion yuan, which is the second highest quarter. So really showing that whilst volumes might be a bit compromised at higher prices, Chinese consumers are happy to spend more on that gold jewellery, kind of just emphasising that, really strong emotional connection that they have to it.
So if we turn to investment, over the last several months, we've seen continued outflows in ETFs. Has that seen any shift in that trend, and how has the borrowing coin space fared?
Yeah, investment's been interesting. I mean, like you say, continued outflows from global ETFs, a lot of that coming from the European listed funds in recent quarters. US funds saw another quarter of outflows, but we've seen that really sharply decelerate now, and we've seen tentative signs of inflows in March and into April. But when you look at the Asian listed funds, they're much smaller in volume, but they've just gone from strength to strength with successive quarters of inflows. And that really mirrors what we've been seeing in the bar and coin space. So Western markets have seen really active levels of kind of healthy demand and fresh buying, but that's been countered by a really strong rise in profit taking that's been encouraged by these higher prices. When we look at the Eastern market, investment demand there, we've seen less of that kind of selling into the price rise response and just much more of a kind of a buying trend into the rally. Now, as I've mentioned on the investment side, there's also been other drivers. So high inflation and weaker currencies in a lot of these markets has really fueled that demand for gold as an inflation and currency hedge, as well as thinking maybe sort of markets like China and Turkey predominantly, just a lack of kind of alternative investments that are going to give them the same kind of performance.
Turkey is an interesting one. If you look at the economic conditions that we saw throughout the quarter, some may have expected a certain degree of distress selling, but in fact we saw the opposite.
Yeah, that's right. They've been buying really in quite staggering amounts for the past few quarters. And as you say, given the really challenging kind of economic environment, you could have been forgiven for thinking that the sort of the distress selling impact would have outweighed the need for inflation and currency hedge, but apparently not. And particularly if you, again, look at the value of Turkish investment demand, I mean, again, that's been absolutely off the charts. I think we were at around 90 billion lira in the latest quarter, and that compares with around 58 in the first quarter of last year. So really a huge jump in the values of investment demand in Turkey.
And did we see a continuation of the trend that we saw last year in that Turkish high net worth investors are kind of contributing to the over-the-counter or OTC investment market?
Yes, yeah, we did. We've talked about OTC demand quite a lot in recent quarters. It's actually been quite a significant contributor to demand. And yes, Turkey has been one of the markets where we've seen high net worth and stock build up as well, kind of contributing to that figure. And that's been true for a number of markets across kind of eastern parts of the world, China among them.
And if we turn to technology, obviously a lot of interest because of the AI boom. How did that translate to gold demand for the sector?
So we saw a really healthy year-on-year recovery in the technology sector in Q1. It's struggled quite a bit for the last year or two. But as you say, it's been the AI boom has been really instrumental in helping to drive growth in gold usage. When you think about the devices and the infrastructure that's needed to kind of enable that AI boom to happen, all of those things contain gold. So that's really supportive for gold volumes in the sector.
And finally, supply. If we take a look at the mine production and the recycling segments, what did we see happen there over the first quarter?
So yeah, we saw mine expansions and ramp-ups in Q1, leading to the highest first quarter for mine production in our data series. And when you add in the recycling impact, we saw quite a big jump there. As you'd expect, we know that a price rise like that is going to encourage selling by consumers. So put those two things together, and yes, total gold supply was up year on year. Fantastic.
Thank you so much, Lou. If you'd like to read more about this, you can download our Gold Demand Trends report and see all of our data and insight on goldhub.com.